Hey, what's going on, everyone? Welcome back to another episode of Breakfast Trades. Finally got my electricity back. Finally ready to knock out some more video content for you guys, so I really hope you enjoy this. Current market conditions have not been the best for trading for a lot of us, so you've had to really do a lot of sitting on your hands, and most people aren't good at that. So I really wanted to make a video about exactly that, when conditions are good to trade, when they're bad to trade, for me at least, and why it's more worth it for me to put in the effort when the market conditions are hot and less worth it when the conditions are not. Also, leverage trading has been a huge topic of discussion lately. If you want to, you can head on over to Bingbon. Please send me feedback, any things you guys want added, any features. Since I've been working with them for the last year, we've added over 15 altcoin pairs. So we're really working hard to make Bingbon a really good exchange for everyone. My point was, leverage is a big deal. Well, a lot of people are new to leverage trading and don't understand it. So make sure you check out my tutorial. I'll add in the card above to using the exchange. Also, they have a virtual currency. When you make a new account, they'll actually load your account with virtual currency. It's not real money, but it acts as real money. So you can actually practice trading, basically like paper trading, but live trading without real money. It's called VST. So make sure you check that out as well if you're new and you want to learn how to short or long without the actual risk imposed. All right, everyone, to get right into this is the chart setup I like to use. I use Gooner EMAs, which is a free script on TradingView. Again, that's Gooner EMA. It is the 11 and 22 EMA. Also, I use the 99 SMA. I use TopGoonX, which is a momentum indicator created by Satoshi Heavy and myself, and then I use OBV. I do like RSI on higher time frames as well. If you want to learn more about how I use RSI, you can check out the card above. I really like to see a large disparity between the EMAs and the SMA. That means that price is trending heavily, all right, in either direction. When they're very close together and they're moving sideways, that usually means that the market is moving sideways, and those aren't ideal trading conditions. Now, you can go to any time frame and trade on different time frames and find this, but you'll see here that for the last over a month now, we've pretty much been sideways and chop. So these are not optimal trading conditions for me. And all I have to do is take a quick glance at my indicators. All right. Notice my indicators here. TopGoonX relatively went sideways for a long time, and you can see here OBV has actually been going sideways for almost 2 months now. This is not great conditions for a momentum trader such as myself. And the reason I haven't been trading very much lately is because effort to reward, all right? And what that means is, this is how I call it. I call it $1,000 an hour market. All right, so I refer to this as $1,000 an hour market. The market is moving heavy. If you get stopped out on a trade, you can get back in and still likely make some money, right? Now, again, risk to reward is important to understand. So if you get stopped out at a small loss, you can always get back in and usually make some good money when the market is trending and moving. So that is $1,000 an hour market. This I consider $100 an hour market. Everything's just pretty much going sideways, you guys. And if you get stopped out, it's really hard to make your money back on another trade because everything's so choppy, everything's going sideways. You end up sitting here staring at the charts for hours, and basically price ends up back where it started at. Here, you can stare at the chart for hours and you're going to see a lot of movement. Here, hours and hours, and it just keeps ending back up at your price. And people always ask, well, how do you spot this? This is how you spot it. You zoom out and you look at your indicators, and you see here that your indicator has been flatlined for a long time. And actually, we've been flatlined for a while, all right, you guys? Here, you see very heavy trending, all right, all the way up. Okay, look at this. Very heavy trending for a long time. And then we still have some heavy trending, okay? And even a little bit more heavy trending here. And this is where we level out, right? So from here to about here, our momentum levels out, okay? That's where we're kind of going sideways in a range. We don't have as much heavy trending here. Momentum has died, and look what happens to price action. It relatively goes sideways for the next month, month and a half. And even here, you see that we are relatively sideways. All right. And again, price action is relatively sideways. We finally start to see some breakdown and some movement, which is where we get this big volatility impulse. And then what happens? Unfortunately, OBV, which is showing momentum, is pretty much sideways. There's no momentum in the market right now. And we have to wait for our next momentum burst. All right. We need to wait for volatility for me to start trading again heavily as I was back over here. And until I see that, I'm mostly sitting on my hands. I've reduced my position sizes because the opportunity cost of trading in this $100 an hour market is not worth it for me. Why should I spend 8 hours a day trading right now, making less money than when earlier this year I could make more money in less time, right? So I like low effort trading. This is where you get chopped up. This is where a lot of people lose their money before the next either dip buying opportunity or breakout opportunity. I'm sure a lot of you can relate to that because there's been so many stop hunts, low volume, low liquidity. You're seeing less volume, which means that the order books are more thin, meaning that price is more easily moved dramatically in either direction. A lot of people, such as myself, are just sitting out, and that is the reason that the volume is lower. So once you see more volatility start to pick up and this range start to break, you're going to see a lot more influx of volume. Traders such as myself are going to come back into the market, and you're going to see a lot more volatility every hour than you've been seeing lately. You're going to see a lot more momentum swings, a lot more ranging price action, all right, a larger range rather than this tight range like we've been seeing. So I really wanted to get this video in for you guys. I really hope you enjoyed it. I think that one of the hardest things for new traders to do is to sit on your hands and not trade. You always want to be in a trade. You always feel like you have to monitor the markets 24/7. Right now is the time just to set some alerts at important supports and resistance levels and just wait. Sit and wait for the market interest to pick back up. And when it does, you're going to find some amazing opportunities, and it's going to be easy money, all right? It'll be relatively easy trade opportunities that will provide good setups on multiple time frames. For now, most setups are fake breakouts or fake breakdowns, and there's just not enough volume to really send us on our way in either direction just yet. Once that volume picks back up, that's when we'll strike. That's when you'll see big traders start to get back in, and that's when you'll see volume pick up. Really hope you guys enjoyed that video. If you did, please hit the like button on it, share it on Twitter. You guys, please subscribe and stay tuned for the next video next week. Peace.